one would assume that into next year, some of the impetus that we have seen in the early months continues, irrespective in some ways of what happens on the virus front or the on the vaccination front.
That's right. I think the one thing we really need to be careful about is avoiding another wave. There is a more dangerous mutant now. We need to guard against that risk. If we can avoid that, I think what you'll see is on consumption, very bifurcated dynamics. We've seen this recovery. When I talk about a K-shape, the top 10% have had their incomes preserved. They've got fuel in the tank because their savings rates were forced up for 2 quarters. And we're seeing that pent-up demand be expressed now. The bottom 20 or 30% have seen a more permanent shock in terms of income losses, wage hits. Now, what are the macro implications of this K?
Yes.
Well, I think it's important not to conflate the level of consumption with the change and not to conflate a transitory phenomenon with a more permanent phenomenon. What do I mean by that?
Yeah.
The upper class has benefited, but it's a one-time effect. Their balance sheets have improved by virtue of a 2-quarter increase in their savings rates. So that sugar rush is going to play out over the next few quarters and will clearly drive consumption. But that's a one-time phenomenon. What we're seeing at the bottom is, of course, their share of consumption is much lower. But to the extent that you've perceived a permanent income hit, you've lost your job or your wages come down, that is a recurring effect over time. The second way to think about this, and this is not unique to India, is COVID has essentially around the world ensured that the relative share of income has moved from the bottom to the top. And every dollar that moves from the bottom to the top, the marginal propensity to consume is actually lower because the MPC is much higher at the bottom of the pyramid. So we need to keep this in mind that we're experiencing a 2-quarter sugar rush, but policy has to anticipate and look beyond that. Where will the economy be in June? And at that point, some of these labor market scars may actually begin to show up. You can see this, in the high frequency data quite easily. Look at the auto sales market. Just look at registration data because that's the cleanest measure of final sales. You see 4-wheelers between October and December actually grew 4% over last year. But 2-wheelers, which are a barometer of the lower end, contracted 15%. So you're seeing a very clear bifurcation in consumption patterns.